Hello everyone, Andrew here with a new YouTube video. In this one we're gonna go over a lot of concepts that we use and how we can put them together in order to create a trading plan and have a good strategy to trade based off. First of all, the most important thing is to have all the time frame charts together and analyze them individually. That's called the multi-time frame analysis. Why we need to use this is because the higher time frames, they dictate what the lower time frame do, and the lower time frame allow us to catch a move from its beginning so we can maximize our risk reward ratio. First of all, daily time frame is the most important one, because if we can analyze the daily structure and where is the liquidity on the daily time frame, we know where the price is heading next. So if we know where price is heading next, then we can go down further on the 4-hour time frame, which again is a good time frame to look at structure and liquidity to see where price is heading towards. That way, if you know where price is heading on the higher time frames, you can start looking on the lower time frames to go to that daily and 4-hour objectives. The 1-hour time frame is one of the best to use in order to find entries, and also the 50-minute is the one that I use the most in order to identify my valid zones and POIs where I want to take trades from. Of course, these are just the main 4 time frames, but I also go down on the 5-minute, the 1-minute, and even 15 seconds or the 5-second depending on my entry, in order to refine and find the exact spot where price is flipping around, gives the entry so I can have a really good risk reward. You can just trade based on the daily, 4-hour, and take entries on the 50-minute. That's also good. Wait for 50-minute confirmation from the 4-hour or daily targets and structure, and if you take the entries on the 50-minute, you're gonna have good risk rewards, like a minimum of 1 to 3 if you just keep the trade running. You're also gonna have much safer entries, because if the 50-minute structure aligns, then if you take the entry, you should be safe. Go to that 4-hour or daily objective or liquidity and take some profits. You need to know all the time frames in order to take an entry and a trade, because if your trading time frames are not aligned, so for example, if daily 4-hour is bullish but 1-hour and 15-minute is bearish, but you analyze the 4-hour time frame and you saw that price should head higher based on the 4-hour, then you should not look at sells. Even if the 1-hour and the 50-minute structure tells you to take sells, you don't have to look at sells, you do have to look for buys, because 4-hour structure is stronger than the 1-hour and the 50-minute, and also the daily is stronger than 4-hour. So the bigger the time frame, the stronger the trend and the stronger the structure is. So you need to follow the higher time frames always. The next concept that you really need to use is premium versus discount. If you don't know what premium versus discount is, you should go ahead and watch the video on the channel where I go more in depth on premium and discount. But basically, you need to know where you will look for entries. So it's important to use the premium and discount zones and choose the correct zone to take trades from. That is why we created this tool and we showed it to you guys, because it's really easy to use, and you also, if you wait for the discount pricing to take buys or the premium pricing to take sells, you're gonna have a lot higher win rate on trades taken in these areas. First of all, let's take a look at this small chart right here. So the 4-hour indicated by the blue dots is our structure, which is bullish. So once it created the new higher high, we're gonna wait for the pullback phase to finish, for price to come into the discount range, and then wait for, let's say, 15 minutes to realign bullish to give us the confirmation. And now we are taking the trade based on the 4-hour, but we execute based on the 15 minutes once we have confirmation. And one of that confirmation is price getting into my discount zone or premium zone if I want to take sells. Once price gets into the discount zone, all you have to do is wait for a smaller time frame structure shift, a change of character here, for example on the 50-minute, and then you can safely take the trade from here, stop loss placed behind the low, and then target the high. This is really basic trading. Then in this area you can start going down on the time frames, 5-minute, 1-minute, or even 5-second, to really refine your entry and have a smaller stop loss in order to maximize the risk reward and also take profits early. Because if you have a bigger risk reward, a smaller stop loss, then price is gonna reach your target faster and you can take profits and then just let the trade run risk free with break even set. Next thing we should look for is if we want to take a risk entry or a confirmation entry. Now usually riskier entries, we and me personally and everyone inside NFX trading, we do take entries, the risk entry, only when we take liquidity. So we can either take the risk entry when our trade is really pro trend. So for example, in this trade right here, if we have a bearish market on the 4 hour, this is the 4 hour zone which we refine to the 15 minute, we can either, because it's pro trend and we know that price is just finished the pullback and it's coming back into the premium zone, in this case because we are taking sells inside our POI and supply zone, we can set a sell limit right here covering the high and then targeting the low. That's a risk entry because we're setting the limit and we're not waiting for the reaction or the switching structure on the smaller time frames. Now, if we take that risk entry, then we should always place break even as fast as possible because we don't know if price decides to push higher, take liquidity and then reverse. I usually don't prefer taking risk entries, but I'm gonna tell you one more example where I take those risk entries. Another good example when I take them is if I have a spike which takes liquidity. So for example here I would only take this risk entry directly if I have something like this. So this is my area where I want to trade from, and then price slowly pulls back and then it gives a really big spike inside the zone. So let's say for example on the 1 minute, it's a huge 1 minute candle that just goes bullish in the first 30 seconds. Then I just market execute sell there, place my stop loss above the high or maybe 5-10 pips depending on the pair, and then when price starts rejecting, because it usually always does start rejecting, then I place my break even, and then that's a risk entry for me. Those entries work really good when you have volatility coming in, when you have a session open or the first 1 hour of the session, and also when you have news and price comes really aggressive into your POI. You just market execute, place the stop loss above 5 or 10 pips, wait for the reaction and then set break even, and then you're gonna have the top wick. That is how I always can catch good entries, sniper entries how they're called, with really good risk rewards because I'm waiting for this. A good example for this type of risk entry is in my latest EURUSD breakdown, where it was exactly the same thing. I waited for the spike up, I just market executed, placed my stop loss above, and then I had a huge 100 pip trade on EURUSD just because I used the risk entry, waiting for liquidity to be taken. Now the confirmation entry is always better than the risk entry, especially when you are trading or you want to take a counter trend trade, but also on pro trend trades it's really good to use it because you have more confirmation, you have a higher success rate, and you're also gonna have a smaller stop loss and a better risk reward. So for the confirmation entry, if this is the 4 hour zone, we are waiting for the 50 minutes. So let's say this is the 50 minute charge, then price comes in, and here we are looking at the 5 minute, 1 minute or the 5 second in order to take the entry which gets confirmed. So if we have the 50 minute charge, then we are waiting for the price to come back into the 50 minute POI supply and also the premium zone. Then we are going down on the 5 minute or the 1 minute, and we are waiting. So here we are waiting again for the 1 minute charge. Once we have the 1 minute charge, we wait for price to come back, and then we can wait for the 5 second here in order to take the entry and have the smaller stop loss. That is how I usually take my entries if I'm on the charts and I'm really focused, and also I know there's a big move coming because price came into my higher time frame. That way I can have really good risk reward trades and a good win rate because I'm waiting for confirmation on all the time frames. Right now we are just giving another example of a higher time frame order flow with lower time frame execution, a trading model that you can take. So let's say we have the higher time frame order flow, which is the 4 hour again, just like using the 4 hour. We have a bullish 4 hour church right here, you can see it, the 4 hour church, and now we can start looking for buys because structure on the higher time frame order flow has switched bullish, so we can start looking for buys. Now here, once we made the change of character and we made a new higher high after making the lower high, we wait for price to come back into the discount zone, into the 4 hour supply zone, and then maybe even a 50 minute POI or 1 hour POI. Once price gets there, then we can start looking on the lower time frame. The lower time frame again can be the 50 minute or the 5 minute. Usually after the first change of character on the 4 hour, I like to look at the 50 minute just because it's much safer. At the next break of structure, so right here, I can start looking at the 5 minute because it's a more confirmed entry. But let's say this is the 15 minute time frame. Once price comes into the zone, you can see the 15 minute chart right here. Price makes a change of character, then it comes back into the discount zone and also the demand zone, and then here I can start looking again on the 1 minute for that 1 minute charge, and then maybe for 5 seconds if I want further confirmation, and then take the trade from there. Once you understand how to execute trades and work down the time frames, trading becomes really easy, and you can have a lot of confirmation for a trade that is based from the higher time frame order flow, and also you can have higher time frame targets. It's really that easy. And then once you have the next break of structure right here, we can start looking for another entry, or maybe if we miss the first entry, we can look at the second entry because this is more of a confirmed entry and we can watch it more aggressively because the bullish structure has been confirmed, making a new higher high. Once it comes back here, then price can realign. We can use the 5 minute in this case, the first 5 minute charge, and then the 1 minute confirmation here again with 5 seconds if you want to go down further, and you can master the seconds time frame, which I don't really recommend for beginners. It's more of an advanced thing, and then take the entry there, targeting again if you have a fixed risk reward. But I just talked about that in a previous video also on the trade management and how you can set your profit targets and exit strategy also. So if you want to go ahead and check that video out also in order to find out how you can manage your trade better. Now, last of all, we can talk about inducement and sweep zones. This is one of the most used trading model, if I can call it, for my entries. This works best on reversal trades because price, as you can see here, this is, let's say this is the 15-minute time frame, this is the higher time frame supply, which is the 4 hours. So price works its way up. You can see liquidity being built before the supply zone, and then once price hits the supply zone, we have a huge drop right there. Usually, and most of the times, once you have a big drop, price will always come back to fill the imbalance zones and come back to, in this case, supply zone that was recently created in order to give a confirmation entry. So this can be a risk entry, and then price always and always on any time frame, it gives a confirmation entry as well. So this is a good model because price has a really nice reaction. It gives a change of character and also a break of structure, but then price starts to realign bullish, creating liquidity. Once you see it fail to break the low and heading back up, you know this liquidity is being taken, so you wait for that, and then you wait for price to either create liquidity again before your POI. And here, if this is the 15-minute, here you can watch the 1 minute time frame, take the entry again. You can see price first change of character, retest, stop loss above the high or even the supply zone, if you have space for that, if you can manage a bigger stop loss, and then you just target the next liquidity point, which is right here. So this trading example is one of the best that I ever saw happen, and it always works. You have a nice reaction from the higher time frame supply or demand zone, have 15-minute charge, break of structure, then liquidity starts being built, price comes back into the discount or premium zone, gives another reaction right here, builds liquidity, comes into the POI, gives a 1 minute charge, and you just enter the trade and target the low. That's the best trading scenario that you can have. So just go ahead on the charts and identify some of these moves on your pairs, USD, GBP USD, AUD USD, doesn't matter the pair, it happens on any pair and also on any time frame. So if you're trading the 30-minute, the 45-minute, the 1 hour, it doesn't really matter. The market always repeats its cycle, so you can always see trades like this. So saying that, guys, I hope this video has helped you in maybe putting all the concepts that we presented on this YouTube channel together and creating a trading plan. If you want to see more of this kind of videos, just go ahead and leave a comment on what topic you want me to talk about, and also give a like, subscribe, and join the free Telegram group. The link is in the description. And I'll see you guys in the next one.